Hey, what's happening, everyone? Aaron Jackson here, aka Rotation Report, aka ATM Charts, aka whoever. This is not financial advice, the 2026 preview edition. It might sound exactly like advice on how to position your portfolio for 2026. It is not. It is not. But yeah, so how are we feeling about 2026? I don't know. I'm thinking it's a little rough. We've got a lot of cycles lining up. You've got, with the metals rip now, more central banks are concerned about inflation, right? So that's kind of lead, the Bitcoin's been kind of telling us like, hey, the easy money that was flowing that allowed these sick rips and all the growth stocks earlier in the year, that money is kind of tightening up a little bit. And if you believe the Bitcoin voodoo, which, the Bitcoin voodoo, hell, it's as real as any other analysis we have in the world, it suggests like the central bank tightening cycle would continue and Bitcoin bottoms in October 5th, something like that. So that's really interesting because, we've got this midterm election year coming up. And usually like if you look into the history books, you study the cycles, it's going to be a rocky year in theory. In theory, it's a rocky year. And it makes a lot of sense because it's like, okay, let's just say one big prediction I have for 2026 is I think China's actually going to move on Taiwan. I know there's something going on now. Are they doing it tomorrow? Wasn't counting on that. Wasn't thinking that. Who knows what the hell is going on with that? But like, if you think about it, like strategically, let's say we're seeing it in the charts here, right? We've got Trump's strategy is like hurting China. It's a problem for them. So, like, yeah, it makes a lot of sense ahead of the midterms that they would be like, all right, fuck you. We're going to take Taiwan. We're going to throw some chaos grenade on yourself, on the U.S. ahead of the midterms. Makes a lot of sense. So, how does the market react? Who knows? At first, it's probably like a panic. Oh, the economy is going to slow down. And that's like, oh, shit. We need to invest more in commodities because we're going to have to rebuild this ourselves here in the West. So, we'll see about that. But yeah, let's get into it a little bit here. And why do I talk about this? Why would I even bring this shit up? Well, check this out. Check this out. Big chart. The first thing I'm thinking about as we head into 2026 is mining versus tech. Look at this base. We got like a decade-long base here now. It looks like a pretty sweet bottom. Is it going to make one more new high here? If it does, like, holy shit, that would be setting off a major rotation on just like the biggest time frame. So like, what would cause that, right? It would be something like a China taking Taiwan. And then if we look at let's go China tech versus US NASDAQ 100 and look at this thing. You could say like, hey, wait a minute. This thing has been seeing this ratio has been seeing sellers up here for years now. And it's basically like it looks set up to roll over in time. It's just kind of a matter of when. And then let's see if we got the oil chart here. But if we look at oil, like oil versus gold, okay, let's zoom this in. You got oil versus gold, fake breakdown here. We've got base metals versus precious metals, false move there as well, right? So we're saying, okay, enough on the debasement. The debasement trade's probably overdone here. What about the inflation trade? What about the building trade? And so, we do find that, to be pretty much the best theme of the year. And the other theme of the year is, you kind of got this, the central banks tightening. Money's going to be tight because a lot of people are looking to raise money this year. I know a lot of hype is out there about the different IPOs, SpaceX, right? Well, they came out a couple weeks ago and they're like, oh yeah, they're looking for 1.5 trillion in an IPO. And then 2 days later, they raised money at 800 billion. So like, I don't know. It's just a lot of funny shit going on. And we're going to want to be patient this year. I think one of the best ideas I've got is like, yo, all right, you don't hit the gym, get in the gym, work on that discipline because I think it's going to pay off pretty well to be patient. If we want to talk about like some trades, some growth trades that might have some juice now, it's in the defense tech space, right? Something like a Planet Labs, hell of a move, pretty extended. My God, it was at 3 a few months ago, but did break to all-time highs. And, something we want to try to buy dips or ride momentum in. But for right now, I don't know. AeroVironment drones, right? Look at that. Okay. Some old support in play here. You got the 200-day moving average kind of around here. We'll see if this little 200-day slash gap holds. That's going to be, I might nibble on that one here in a couple days. But if we look at the fear ratio, it's just the Santa Claus rally at the moment. It's all played out, right? A lot of greed in the tape, regardless of what any CNN indicators suggest. Nobody cares about that shit. It's don't listen to that. That doesn't know shit. But yeah, gonna need to be patient here, no doubt about it. And the one group I'm really looking at, gonna definitely be writing this one up. Aerospace. Look at the Dow Aerospace. Look at that nice big base. It kind of got lost in the wash this year because of all the AI hype and all that bullshit. 3,200 here. It looks like we've got 3,800 is the next upside target. This as strong as anything. Defense. Let's take a peek. How's defense doing? We've got these contractors. Yeah. This is mostly contractors, but we like it. We like it, especially above the moving averages. Hard to not like it, right? And then let's look at we've got something like a Graham. I don't know if you know about Graham. Most people do not know about Graham. I recommend looking into it. They've got energy business. They've got contracts with the Navy, and then they're taking the same stuff they do underseas and they're taking it to space. So the space division as well. And if you zoom out on the all-time chart on this thing, look at this guy. Little small cap industrial, awesome all-time kind of range there, right? From 6.5 to 55. You break above it, and now it's just kind of working higher. So, definitely a fan of this Graham on pullbacks, but I do own some, but we'll see how it goes here moving forward. And I don't know if you saw the blog I had out today. Yeah, we're short gold, bearish gold. Calls are out. We're making some calls, and it is gold's going to 4K. That's where I'm at with the gold. Nice little fake breakout there as people panic into gold at the end of the year. Gold's up like 100, and gold miners are like up 170, 160%, something that gold miners are outperforming the NASDAQ 100 by like 140% this year. So it's like everybody has to pile into this at the very end of the year. And then when you get to January, I bet you a lot more, longtime gold bulls are incentivized to be like, all right, let's just take some off the table. So, we're seeing it pretty much all over the place. We've got XLE versus GDX is one I was citing specifically. Just another one of these. You've got that October momentum low and then a price low here. Fake breakdown, trying to be a fake breakdown. But yeah, this is, you zoom it out long enough, nice long-term support area. You would think even if this doesn't work out, the first few days of 2026 should hold up. So do expect a rotation out of gold and into energy. And but it's not just going to be energy. It doesn't look like. It looks like steel's holding up well. Well, I don't know, kind of interesting look there, but bigger picture, like no doubt about it. It's over 75-ish, 77. You've got room to like 110, 115. And if we look, my God, you look at the new highs list today, Alcoa new highs, all the aluminums, just immediately new highs. And then you've got this Aero Copper, Tech Resources. Tech Resources look pretty damn interesting here. You break through this 47, 48 zone long term, but let's you unadjust it there. Very interesting area around here. Could be getting through that, but what else? Oh yeah. So check this out. Odd to see ExxonMobil been at the 52-week high list both days this week. How about it? Are we gonna finally see this little base breakout? Because if you zoom it out, check it out. It did break this big old lid from like the mid 2000s there, in 2022. And then just ever since, it's been consolidating right here. Real important area, but it is like one of the first energy stocks to make new 52-week highs after that recent sell-off. So if anything's going to do it, I mean, it looks like Exxon, and there's a lot of talk. They've got a special new proppant, and that's what we need in all these new shale wells is like, that for the existing technology, they got all the good out of them they could. So now they're trying all sorts of, they're trying anything, they're trying everything. I saw Occidental Petroleum had some call buyers today. They're using the CO2. That's the whole Warren Buffett play, right? That you need to use the CO2, the carbon capture, to pump some shit in there to get more oil out of the wells. And it's that weekly RSI here, nice and firm. And if you zoom it out, it's this 34 is a key Fibonacci retracement off the 2021 low. So definitely just looking for various names, just anything that pops up on the 52-week high list in energy. Very, very interesting. What else do we have going on here today? A lot of copper, man, Valet. I don't know. What are we liking? What are we liking on the hammered list? Let's see what we've got here. Nothing anyone knows about. Warby Parker. Oh, okay. That one's selling off. Okay. How about Rivian though? Rivian's very interesting, right? Because it's like, okay, clearly that thing has tried to bottom here. Pulling back a little bit. Let's zoom in. But you see, they had an AI day. It rips really hard. Still, is it just basing out here still? Very interesting because we're going to pop this 200-week moving average on it. I think if it holds above this 200-week moving average, you base it above there for a few weeks here, 17, 18, just kind of calms down, just kind of gets lost in the mix. Hell yeah. Hell yeah. But it's weird, right? Because you had this massive growth stock rally, this massive AI rally all damn year, and it didn't go until December. So that's kind of got me off it. And we drew some trend lines on here where it's like, oh, this thing's bottoming, it's going to turn, and it just never ignited. It's just weird that it never ignited. That doesn't mean it can't, but we'll see. And then this Baidu really stood out yesterday as the CCP circled Taiwan. This thing went red to green. So this is definitely going to be a good tell because look at the reaction today. The demand is just there. Is that a little bottom hammering out here? Could be. It's definitely about time to look into buying the China tech, which, that's really interesting, right? You got the China tech right here, right where you'd want to buy it. It's holding up. So, it does. We don't know that China is going to take Taiwan. And I imagine if they did, global investment flows would not work out for them. But for now, looks fine. And we're looking BABA. Let's take a look at BABA. People are worried about the China economy, which, fair. But here we are, right? I mean, it's kind of an interesting zone here, this old high area. You zoom in, it doesn't look as great, but 200-day moving average right there. But let's see. Want to think big picture. What are we thinking on the treasuries? They do a great job not allowing these things to break down like at all. But eventually, I feel like you can't just do it forever, right? They continue to hold in there. So what's the bull case here? That this international treasury bond ETF would just break through this 23 zone? I mean, could be, but I'm not seeing it for now. Doesn't mean it's not going to happen because we go back to TLT. Huge short interest in the TLT. The shorts are really running amok in both oil and treasuries. And I think that's how someone really isn't thinking because it's like, how is that? How are both things true? Like debt deflation that is just so out of control. No one's going to do anything about it. Because I think the one thing people might forget is 2022 was like, the government was like, no, we're crushing this tape. We're crushing this market to crush the inflation. And, they did. And let's see. If you guys got anything, I don't know if anyone's lurking. I wouldn't be. But if you are, shout out something you want me to look at if you're hanging out. The gold. We got the gold versus 4,400. We're still just under it. You get above the 4,400 too much, you get loiter in there. Okay, that becomes a problem. Frankly, we'll probably just keep an eye on it until Friday. I do have a short position, but whatever. Not going to really act until January from this point. Let's see. And the Sibanye Stillwater plus 5% today. Palladium, I don't man, let's look at that palladium because what the hell, man. Platinum, the palladium. Look at that move because it sold off so hard. It's now just at the old high, hanging above it. But that is a ton of volume too. And again, like China was like, hey, watch out on the gold. And when China says something like that, hey, don't be careful with the gold. That's usually because they're planning a move, they're planning a play. Uranium, liking the uranium into next year, but you look at the mining ETF, it's just kind of stuck here, consolidating in no man's land. The NLR, though, yeah, it just needs time. That's going to need a little time, finish basing out. And that's the bull case, right? Let's see what else we've got here. Looking into next year, the big tech. Ooh, the big tech. So NVIDIA, big question. I don't have an answer. 195, 196. That's the answer right here. Kind of looks like it could be a top. It is if Taiwan Semi goes, they're going to shut that thing down as soon as the CCP takes the island. So, that would be the risk there. Palantir in general. Let's take a look at Palantir. Yeah, the big concern here is this is just a giant top. It might be. And look at the weekly on this thing. You want to short Canada. We might have to put a call out on this one that Palantir is going to 120. It might just, the nexus of expensive growth with a great business, 50-day moving average here, but this whole recent pop just gave it all up. So, would not be surprised to see that continue to fall. But, who's going to sell right at the 50-day moving average? Not too many people. That's not the best course of action usually. But then there's growth versus value. Another one we're keeping an eye on. Look at that. Hold that key pivot. Is this a top here? It might be a top. And based on what we think about money getting tight, everybody needing to raise money, real good chance this thing just rolls over here. But, you don't want to get too jump into conclusions at this point. And what else we have here? Industries and groups. Biotech. Who doesn't love the biotech here? Another one. Just a nasty little pop and fade. There's sellers here. Underlying sellers. That 50-day moving average is going to get bought, but ultimately we don't like that. Don't like seeing that. Could be some risk off coming. You look at NASDAQ, biotech, IBB. Yeah, stuck at this 2021 high zone. So, give it some time. Patience is the name of the game in 2026. It's, I think, more of, kind of build your list and wait for the news to talk about the stock market having some, some pullback, some crash, some struggle, something. And then you kind of attack. I don't think we want to be taking this whole playbook that we're, frequently trading as much as we were in 2025. It just seems like that's a loser's game here to start the new year. And, we can be wrong because the internal breadth metrics are pretty good, but, there's a lot of momentum and people piling into the tape into the end of a strong year, right? The NASDAQ 100 was up 20%. There are endless stocks up over 100%, right? Like, my God, look at Lumentum. My God, look at this thing. 45 to 400 just from April. I mean, holy shit, man. It makes a lot of sense that people are piling in here. And then let's look at defensive ratio against Staples versus S&P 500. Kind of sucks, but, not making new highs with the index, which here, keep an eye on this index. No doubt this S&P 500, there are just so many target areas, long-term Fibonacci's just lined up here in the major indices. You look at the NASDAQ 100, this is a big key level here. I mean, we can certainly see the scenario where this thing, just kind of topping out here. and then it just kind of rolls over. Actually, that might be the base case. Hadn't looked at this in a little bit, but that might be our base case. But let's take a look at a couple of the. Let's look at some leaders here. The NVIDIA, we're waiting for 195, 196. This high-end Google was a key Fibonacci extension. It makes a lot of sense that it's just going to pull back. I mean, it's such a big company, right? It's just like, come on, it's a cash register at this point. You pull it back a little bit, makes a lot of sense. What, 250, 260? Or just go sideways for a few more months. Like, makes a ton of sense. Microsoft lagging pretty hard. Pretty much unable to rally off the 200-day moving average and below this pace. That's not bullish. That is a problem. That is a problem. I'm not messing with any Microsoft and good old Oracle. Good old Oracle. No thanks, man. I mean, maybe it breaks up. You had the nice little momentum divergence there, but also, damn, what is going on here? And let's see. Ooh, let's look at a big loser. Solar's having a it's the Q Clean that's having the bad day. I don't know if that's Tesla. It might be overly exposed to Tesla. Green energy having a bad day, but solar is up. That's kind of odd. Let's look at First Solar. That's the one. Oh man, another one of these big pops and fades. But if you zoom out on First Solar, obviously, look at that, over 300. Gets real damn interesting. Let's look at ARC. Why not? Stuck under the 50-day moving average, but still holding up longer term. So that's going to be an interesting, above 70 and the 200-day catching up here. That's going to be pretty awesome tell here in a few weeks. Not today, but soon. S&P high beta. Could be worse, right? Hanging out, fresh highs, just consolidating. That could be a lot worse. What we got? Low volatility stocks. Yeah, another just basing higher there. But yeah, I don't know. It's I think the economy is going to be a little bit stronger than people think. It's just stocks are so goddamn expensive. Let's see if we can find this Warren Buffett indicator. Check this out. Where are we? Over 200%, the highest level ever. And oh boy. Here we are. Look at that. Highest levels ever. The only reason it's up here is because the Fed's like, screw it. We're still keeping it easy. We're trying to grow out of this. And this is pretty problematic, unsustainable one way or another, which is another reason why everyone likes gold, but like why I'm thinking we want the base metals and the oil, the energy. So I don't know. I think I'm going to just leave it there because it's pretty simple, right? We like base metals, steel, energy, stuff like that. Feel really good about that. And then as you work your way through industrials, yeah, pretty good, but it's like extended. So gotta be patient. There's good, like a lot of good stocks out there. They're going to have earnings for, growth for another year or two, probably at least, good runway. But the problem becomes like field position, the technical position in so many of these stocks. It's just like, we can do better. And, you want to trade and that's fine. We can all make some trades here and have some success with that. But is it worth your time and worth your effort? And just probably not. Probably better to just focus on the bigger picture swings of the year because, the market is an opportunity machine, an opportunity coming. So that'll do it for me. And thanks for tuning in and Happy New Year, everyone. Until next time, we'll see you.